Hey, what's happening, guys? Dan Darrow here with another Options to Play video update. So, hope you all had a wonderful weekend and you got plenty of rest because you're going to need it. This week is going to be absolutely bonkers. We have just a huge lineup of earnings, some really big names. Apple, obviously, a huge one. Also, we have the FOMC rate decision on Wednesday, which I'm sure you have had some knowledge of this coming for a while. If not, I don't know. You must have not been watching the news for the past 3 months. And then the jobs report Friday. So just like an absolutely like just packed week of big headlines. And I thought it was a great time to kind of like do like maybe like that monthly catch up of like the spider setup, right? I like to do this about once a month just to kind of set the set the tone, kind of what I'm looking at. And what's interesting about this week will be the option pricing to me, and kind of maybe like um, the lack of a large expected move, which is a little bit unusual. So I'll get to that in a second. But as we head into what should be one of the busiest weeks of the summer, if not the busiest week, just in terms of what's expected headline wise, um, we are just in a really aggressive uptrend, right? It's drawing a lot of similarities to what we did in April, right? With just kind of a lower volume, right? Highlighted this recently, just a low volume. We had a gap, breakaway gap, and run with like a strong trend above the 8 EMA, right? And then one of like the hallmarks of that April move was the very light participation, right? Light volume, and I say light because the volume was below average, and it was also right in the middle of earnings season, right? And then we know what happened in May. The Trump started tweeting about how he was going to raise tariffs in China, and then things all started to fall apart. But now what you have is kind of a breakaway gap, right? This was the beginning of July. We had the G20 meeting, and at a breakaway gap, and then a light volume grind higher. We did break a little bit below the 8 EMA, but quickly got back above it, and now we're solidly above the 8 EMA again, right? And as you can see here, right, lower volume, lower average volume on a day-to-day basis, and again, right in the middle of earnings season, right? So a lot of similarities, um, and technically, I mean, you're expecting the trend to hold as long as we remain above the 8 and above the 20. This really like slow steady trend is going to remain in place. If we lose the 20-day, which you can see here, it's down to like 298 or just under 295 really. So if excuse me, not 295, 299, 298 and 95, so just underneath 299. So if we lose that, then you got to be a little bit more cautious because as you can see, just again using like the April to May time frame as kind of like a guide, right? I mean, when we lost the 20-day, then it was a quick move down to the 50. So if we break the 20, that opens up a potential deeper retracement down to the low 290s to test the 50-day. That's really like the next big level underneath. So trend's intact, and as long as we remain above the 8 and the 20, the trend should remain intact. But again, I mean, it's a huge week, and I mean, that could change pretty quickly. So in terms of pricing, so this is why I said it was a little unusual. So the spiders have the midweek expiration, so that's the Wednesday, right? So that's July 31st. So that goes to the Fed meeting, and they're looking for about a 2.75. Okay, and if you go out through Friday's expiration, so an extra 2 days, it's about 3.5. So 3.5 for Friday, about 275 for Wednesday. And what's interesting is that if the spiders only move 3.5 points top to bottom from where it, so say from where it closed Friday, so like some 3.5 points up or 3.5 points under where it closed Friday, that would actually be the smallest weekly move, smallest weekly trading range on the spiders in July. And why that's unusual is obviously because it's an absolutely jam-packed week of headlines, right? Um, so it seems as though there isn't a lot of expectations for a big swing this week, and maybe it's because expectations are so one-sided, right? Um, A lot of people are expecting a rate cut this week. The magnitude of the rate cut, that's cause for some potential surprise because as it stands, about 71%, give or take, 70 to 71% are sorry, 73% are expecting a 25 basis point cut, and about 27% are expecting a 50 basis point cut. So somebody's going to be surprised, right? If they cut 50 basis points, then 73% of people are going to be surprised. If they cut 25 basis points, then 27% are going to be surprised. If they don't cut, then 100% of people are going to be surprised because right now it's 100% expected that they're going to cut. So obviously the most amount of people would be the most surprised if they don't cut, which would also probably lead to the sharpest reaction. I think most people believe that we would be down quite a bit if they don't cut because it's 100% priced in. It's just the magnitude that there's a little bit of a room for uncertainty there. So anyway, I mean, I don't often trade the spiders to the long side. It's mostly I view the spiders, Qs, Dow, IWM, those as more like hedging instruments. And there's certain scenarios like this week, and then actually like I talked about this going into the G20. There's certain scenarios where sometimes it's maybe worth it to like open up the playbook and possibly look at like two-way trading on these instruments, on these ETFs. And this might be one of those weeks just because of the magnitude of of like the news expected. The fact that the option prices seem to be low just based off what we've done in July alone, and then you take into account the middle of earnings season with some huge names, the jobs report Friday, which I basically haven't even talked about. But I mean, the last couple of jobs reports, we've averaged over a 3-point move. So that was here. So here, so July 5th. It's about a two, top to bottom, about 2.8 points, and then beginning of June was here, which was about 4 points, top to bottom. So we've just alone had some really significant moves just on the recent jobs report. Then you throw in the Fed day on Wednesday and the middle of earnings season, and it might be one of those scenarios where you actually look to maybe open up the playbook again and think about maybe trading two ways on these contracts, just because right now like the premiums just don't seem to really be reflecting all the potential with all like significant news announcements. All right. So I know kind of like a longer video, but I wanted to go over some of that stuff. Just I like to do at least once a month. Felt like this was like a great opportunity just because it's such a huge week. So if you have any questions or comments, definitely reach out. And I'm really excited because I think there's going to be a ton of opportunity, a ton of stuff flying around. So like I said when the first started the video, I hope you got a good weekend of rest because it's going to be a really busy week. All right, have a wonderful night, and I'll talk to you guys all tomorrow.